Let's check in now with Alan Knuckman, the Chief Market Strategist at St. Paul Research, who is on the stock watch for us today. Hello, Alan.
Hi, Angie. As you can see, some stocks are hot, some are not. We've got 10 consecutive winners since Christmas of 50% and 100% on our plays.
Tell us about your recent winners, Alan, because you took a gamble on a casino stock.
All right, let's talk about taking some of these profits. LVS, we sold a 50% gain in 3 days last week. On Friday, we closed that out. Halliburton, we closed, and AT&T, we closed out on Tuesday as well.
What about your January positions? What's happening there?
Current positions for January. We're doing some cleanup here. Expirations coming ahead. Walgreens Boots, we've got an in-the-money option that we're very much ahead on. In silver, we've got an in-the-money option that we're a little bit behind on. And LUV is at the money, about break even.
Alan, you also have some options plays out in March and June.
Looking at some of the further out plays, March, we've got the second half of Nugget where we're going for 100%, and we've got FXI, which is a China ETF bouncing back, getting close to 40. For April, CSIQ, UNG, and then we've got, for the June duration, we've got LVS and T. We're both going for 100% on the second halves of those positions with a long-term play in Credit Suisse for January of 2023.
So what's your new trade of the week, Alan?
All right, this week's trade trigger, it's Twitter time again. This used to be one of our favorites, but it's kind of fallen out of favor for the markets. Now, this is a stock that's 50% off its highs from last February, and it was down 15% last year, whereas the NASDAQ, the tech sector, was up 25%. So not only that, we're seeing bullish divergence bottom. It made new lows, but not new highs in implied volatility. That's usually a strong sign that the sellers have run out of strength. So looking at this, it's back to the breakout. It's come back to the highs that we had back in 2019, 2020, and 2021. So that's important to see how this holds as a support level. And in the big picture, it's been between 20 and 80. So 50 is the upside target. Looking at this play, I'm going with the April 35 calls. April 35, again, it hasn't been down to 35 since 2020. And that 35 call is trading for about 550 right now with plenty of upside potential.
How about your trading day takeaways?
All right, let's talk trading takeaways. Number one, golden. We've seen a gold rush here, closing in on the November highs and getting close to that 1900 channel top that we've seen in the gold market between 1700 and 1900. If it breaks out there, then we're looking at 2100 as the last of the commodities that's not played ball. Number two, 7-year itch. Speaking of the commodities climb, crude oil. Crude oil has been straight up here, above $85 a barrel now. Hasn't seen this level since 2014. That is a sign of strength. And also, as a trader, extra satisfaction. The 100% we got on Halliburton feels good when we have to pay more at the pump. Lastly, number three, interesting rates. Yes, we talk about interest rates every day. Every single day we talk about interest rates. The German 10-year yield finally is no longer negative. Think about that. It's been negative for years. Negative rates. Well, here in the U.S., we're getting a bit of a bounce. We're looking like we're going to get a March rate hike. That's pretty much priced in. And there's a 33% chance, a 1 in 3, that that'll be a 0.5% rise. Now, looking at the markets are telling us we're going to go from zero where we are right now, again, 0 to 1% by year's end. 1% will be where we will be with interest rates at year end. If you don't think that's cheap, we got to have a whole nother conversation. So we still have very, very, very low rates.
Well, thank you, Alan, for that interesting look at rate hikes.
Thank you.
Go to businessfirstam.com for where to see our show on TV.